Now, taxes in bankruptcy, very complicated subject, kind of a bit boring and dry. When you're thinking about taxes in bankruptcy, the first thing you got to ask yourself, number one, is this person a tax protester? Did they file their taxes or did they not file their taxes? Over my years of doing this, I found some very interesting individuals. Some people thought they could convince me that they don't have to pay taxes. Nice, if you think that you want to do, I have no problem with that. But if you're asking me to put you into the bankruptcy system without paying your taxes for 20 years, you're going to have a little bit of a problem with that. So the first thing you got to wonder, I got to say, number one, have you filed all of your past year's tax returns? That's a prerequisite to get into the bankruptcy court. Number two, have these tax returns been timely filed? That's a huge question. If they have not been timely filed, then they're not going to be dischargeable in bankruptcy unless a sufficient period of time has elapsed for them to be not timely filed, but into the system long enough where it meets the statutory requirement. But before we get into that five-part test, I want to talk about the advantages and disadvantages when you're thinking about bankruptcy. I like bankruptcy for tax debt if I can discharge it, a substantial portion of it. I'm not going to put you into a bankruptcy or recommend a bankruptcy for you if I can get rid of $5,000 of IRS debt, but you've got to pay $95,000 of IRS debt. I think in that situation, we want to look at other areas. However, let's say, for example, you have some old tax debt the IRS never really picked up on from 5 or 6 years ago. The returns were timely filed. The debt was assessed. There's no tax liens out there because you don't really have anything, or they're just the IRS never got around to it. That's the person I want to put into the Chapter 13 and find out what that actual tax debt really is. And at the same time, how much of it falls into the category of unsecured non-priority. That's the debt that we can discharge. So when I say advantages of the bankruptcy, again, I like Chapter 13 when it comes to paying the IRS or discharging the debt. And here's why. A lot of people don't know this, but my opinion, I see a lot of people going out and doing a lot of crazy things with these tax yo-yos on TV, who I can get you pennies on the dollar, I can do this, I can do that. Baloney. Don't fall for the scam and don't fall for the hype. Now, I'm not going to say these guys haven't helped somebody out there. The overwhelming majority of people I talk to who've dealt with them have just given them money and got no real results. So take everything on TV, especially this program, with a grain of salt. And I say that jokingly. Honestly, folks, I'm not out here asking you to give me anything. I'm out here providing information to you. I'm not asking you to take what I say as truth be told until you're ready to take it as truth be told. What I'm saying to you is some guy on TV shaking his hand saying, I've got 600 offices across the United States and I'm the best tax guy out there. Okay, great. I want to talk to some people who you've helped, and I want to see somebody in my exact circumstances what the results you got for him. If he can give you that information, fantastic. If he can't, which I highly doubt he can, it's hard to play because everybody's got individual circumstances and no two people are the same. So if somebody got pennies on the dollar, good for them. I'm talking about the other 50 to 90% who weren't helped at all. So that's my 2 cents on that matter. So again, if you've got taxes and you're thinking about bankruptcy, you want to sit down with a qualified bankruptcy attorney, look at the advantages. Again, there's advantages of filing bankruptcy to pay your tax debt. Alternatively, bankruptcy does not come without a disadvantage. Let's face it, everybody knows if you file bankruptcy, it's going to be on your credit report for 10 years. That's a disadvantage. Is it going to cost, if you're going to finance stuff in the future, you may have to pay a higher interest rate because of the bankruptcy on your credit report. One of the problems I see is people will file bankruptcy thinking they're going to get rid of the tax debt. Then they find out, oh, well, I can't get rid of the tax debt, and they dismiss the bankruptcy. Now you got a bankruptcy and a tax lien or a tax debt on your credit report. 2 blemishes. So again, it comes out to thinking and planning these things out. So now, what's another disadvantage of the bankruptcy system dealing with taxes? Well, those debts that are non-dischargeable. Are you able to pay them in the 5-year window that you're allowed? We've had some cases where we went into the bankruptcy, we had every intention of repaying all this tax debt in 5 years, and then the person either loses their job, has a job change, a change of financial circumstances, and now they can't fulfill the obligation. Great. What does that mean? Well, if you can't survive the bankruptcy and get the discharge to wipe out the dischargeable taxes and pay off the non-dischargeable ones, you're sunk. Because now you're down the line, let's say 2 years, all that tax debt comes back. It's there. The IRS knows you have a propensity to file a bankruptcy, so what do? They may put a tax lien against you at that point in time when you don't have the protection of the bankruptcy court anymore. So again, strategy, and we want to make sure we can fulfill the terms of the Chapter 13 plan. Another one, some taxes are non-dischargeable in a bankruptcy. We know that. If they don't meet the plan test, or if they're within the last 3 years. If you have tax debt from the last 3 years of income taxes. Well, what if you have some other type of tax debt? Let's say you're a business owner and you have taxes that you withheld from your employees and you didn't pay. Yikes. I call those the 100% penalty tax. That's a problem. The trust fund tax. If you're withholding money from your employees' paychecks and you're not paying that money to the IRS or the federal government, big problem, and it may cause criminal action against you, so be really careful of that. They don't call it the trust fund tax for nothing. So obviously those are non-dischargeable debts. We're not going to let you commit basically a crime and then use the bankruptcy courts to get out of it somehow. So you got to be real careful about that. Then you got a question of what happens if you come out of the bankruptcy. Let's say you file a Chapter 7. You get rid of some of your debts, but then you've got other debts which are non-dischargeable. I'm talking IRS debts that are non-dischargeable. Okay, great. You've gotten rid of certain debts, but now you've got these other debts. You come out of bankruptcy, and now the interest and penalties is accruing like crazy on the debt that's non-dischargeable. Yikes. So bankruptcy may not cure all your ills when it comes to the tax debts. So you got to be real careful about that. Another thing a lot of people don't understand, tax liens. Liens survive bankruptcy. So in other words, a mortgage, if you have a house, a mortgage survives the bankruptcy. If you have a car loan and is a properly perfected lien on the title of the vehicle, that survives bankruptcy. Same thing applies with the IRS tax liens. That survives bankruptcy. I know I'm hitting with a lot of information, folks,